So to help you guys understand some more about the legal structures of a business, we do want to cover that. But I do want to make a disclaimer. I am not a lawyer, so I can't give you advice directly on what to do with your business, but I can help to educate you on some of the different options that you have. So the structure of a business dictates what its operations are, responsibilities are, and even it could affect the success and failure of the business. So in this section, we do want to explore some of the anatomy of different business structures to help equip you with the understanding of their implications. So choosing the right structure is crucial, and it's good for successful business operations and management. But understand this, whenever you first get started, operating as a sole proprietorship is not a bad option either. You just need to make the decision for yourself. So some of the anatomy of a business structure is going to be sole proprietorship, partnership, corporation, or a limited liability company. So a sole proprietorship is a single person business, and the owner has complete control and receives all the profits, but they are personally liable for the business's debts. In a partnership, this business is owned by two or more individuals. They share all of the profits, all of the losses, and all of the responsibilities, including the personal liability. In a corporation, this is a separate legal entity owned by shareholders. It's provided limited liability for all shareholders, and they elect a board of directors and officers to manage the business for them. And then an LLC, or limited liability company, is a hybrid structure that combines the liability protection of a corporation with the simplicity and tax flexibility of a partnership. Members are not personally liable for any of the company's debts. So some pros and cons are going to fall within really and truthfully what it is that you're looking to accomplish and what it is that your professional advisor has told you should do. But in a sole proprietorship, you have full control. That's a pretty good pro. And it's easy to set up, and it's pretty straightforward with taxes. The problem lies with the personal responsibility for any business debts, meaning that if you take out any money or you make any type of deal, that falls back on your social security number and you personally. Within a partnership, this comes with the benefit of shared decision-making, shared risks, and profits. But you still are personally liable for all of the debts. In a partnership, you can see a lot of the pros there with not having to take on the whole responsibility yourself, especially whenever it comes to deciding the future of the business, sharing within the risks, and even sharing within the profits. But it is pretty hard to be liable for any business debts because, again, it's all in your name. As a corporation, the limited liability for shareholders and the perpetual existence make it extremely appealing. This is going to be reserved for larger companies that have a lot of revenue and really and truthfully have the time and resources to be able to expand their business ventures. But there is a lot of complex paperwork, and there's potentials of double taxation even within this frame. So make sure that if you're wanting to go into the corporation route, that you have a professional that can help you go through that one, because that is not meant for anyone to go through by themselves. Finally, you have a limited liability company, and this is where you see most of your businesses fall under because limited liability has members. It has flexible tax options. It has very limited paperwork that is confusing, meaning that you could do it on your own without speaking to a professional, but it is always advisable to speak to a professional to ensure that you're following through the way you should be. Now, there are some additional paperwork and formalities. There's formation costs. A lot of states do annual reports, different things like that. Really and truthfully, it just boils down to what works best for you. Most businesses, especially online businesses, are likely going to fall under sole proprietorship and limited liability companies. So just keep that in mind too as you're moving forward and trying to decide which one is best for you. So to understand some more about this, let's talk about some of the legal implications like liabilities, tax implications, and regulatory requirements. So for the different structures, while they offer different levels of personal liability protection, sole proprietorships and partnerships expose the owners to unlimited personal liability. On the flip side, corporations and LLCs provide limited liability for their owners. As far as tax implications, taxation is going to vary depending on the business structure. For example, a sole proprietors report business income on their personal tax returns, while a corporation may face the possibility of double taxations, meaning that they could be double taxed for specific instances, possibly on their purchase of goods like computers or desks or hardware could be paid for in taxes by the sales tax and a business tax on those goods each year. And then regulatory requirements. Each structure has specific paperwork, registration fees, and regulatory obligations. You need to understand these requirements because it's crucial for compliance. Now, of course, a lot of these things are slap on the wrist infractions, but you do want to make sure that whenever you are going through and deciding which type of business you want to be, and as stated already, sole proprietorship and limited liability are pretty much the two that you will find whenever it comes to online businesses. There are some that fall into the partnership and corporation category, but for the majority, it's limited liability and sole proprietorship. Going through and making sure that everything is updated with your state, the federal government, and everyone else in between can keep you out of hot water, but understand this. There is always room for forgiveness, and as long as you're willing to work with the people that you need to work with, you can overcome anything that you have missed. Just make sure that you talk to the right professional so that you can get everything put together correctly. To help you understand a little bit more, let's talk about the hierarchy. Within a corporation, the structure is going to include shareholders, directors, officers, all with defined roles and responsibilities. Officers are going to be like your chief executive officer, your chief financial officer, etc. You've got directors, board members, shareholders. Those are the people who have invested. So there is a hierarchical structure that allows for decision making at different levels. With a sole proprietorship, it's really simple. The owner of the business bears all the responsibility. You do not have any structure to your company where you have multiple people in different places to be able to handle decision making for their respective areas. You do, however, have the opportunity to subcontract people to be able to help you with these things, but ultimately the buck stops with you. In a partnership, this is distributed evenly. Typically, you will see partnerships distribute the responsibilities and decision-making among the partners, and they do so based off of the strengths of each partner in the partnership. If you're going to do a partnership, you'll want to make sure that is laid out in detail. And the reason we kept limited liability off here is because it is essentially the same as partnership. But the partnership and the limited liability differ because in a partnership, all the responsibility of liability falls into the partner's laps. In a limited liability, it does not. But it is essentially the same thing. Members distribute the responsibilities evenly among them based off of their strengths and weaknesses. Finally, you'll want to just choose wisely, because choosing the right business structure plays a critical role in the overall success, operation, and management of a company. This decision impacts tax payments, personal liability, and day-to-day operations. So take the time to assess each structure and consider your personal and business goals. This will help you make the right decision. To dive deeper into understanding the implications of each structure and ensure a solid foundation, you might want to do a little bit more research and check out what somebody in the professional field has to say about it.